Mortgage rates are finally falling. So it's December of 2023, December 13th. The Federal Reserve met in an open market committee, is what it's called, and they decided to pause the interest rates. Now, when they're talking about interest rates, they're talking about the federal funds overnight rate. That's the rate at which banks, the big, huge banks, borrow money overnight. That's what the federal funds interest rate is. Now, I'm going to explain in this video exactly how rates are determined and what is in store for 2024. So stay tuned. I'm Jen Hernandez, lender since 1995. I've helped thousands of people finance their homes, and I'm here to bring you real facts, no BS. So welcome to my channel if it's your first time, and welcome back if it's your second. So let's get into it. So the Federal Reserve, who exactly are they? The Federal Reserve is a central bank and monetary authority in the US. So they make sure that things are stable. They make sure that there's monetary policy to make sure things don't get out of control. They help curb. They've been curbing the inflation since 2020. We saw this rampant inflation. I'm sure you've heard it all in the news, and you've also felt it in your paycheck. Like, milk is more expensive, gas is more expensive, going out is more expensive, everything is more expensive. And so that started to happen in 2020 and 2021. Federal Reserve came in, since they're like the police, like they're the oversight of the United States financial system. So they came in and were like, hey, we need to choke the economy so that this inflation stops, right? So they said, we're going to increase interest rates little by little. They didn't know how much they were going to increase them, but did you know that since March of 2022, when they started to raise the interest rates, it's gone up like 5.25%. So it goes little by little by little. Nobody knew how much they were going to raise interest rates, but they kept raising because it wasn't working. Everybody was still spending money. So that's where, when you see in the news that indicators come out like, hey, what's inflation? What's the CPI index? What's wage inflation? What's employment and unemployment numbers? All these things are indicators. And these indicators indicate what's going on in the economy. So numbers were continuing to go up. So the Fed was like, hey, we're going to keep increasing the federal funds rate because people aren't stopping to spend money. So fast forward to now, more recently, here in December of 2023, the Fed is kind of satisfied with this maybe being the peak of this inflationary period. So they said in this last open market meeting, they were like, okay, hey, we're going to just pause. And we forecast that potentially in 2024, the rates, we're going to start to bring them down. Now, that was all the market needed to hear. So let's pause here for a minute. The interest rates are determined, the mortgage interest rates are determined from what the stock market and bond market, specifically the bond market, are doing. So the stock market is more risky. The stock market is where big hedge funds and big investors and your mutual funds are invested. That's the S&P 500 and all, Coca-Cola and all those stocks are in there, right? So the stock market, however they react, then the bond market, which are the safer investments, then they react. And it's this cat and mouse game. So the stock market and the bond market is where the mortgage rates are determined. So what happened on the December 13th when the news came out that possibly this was the end of a really bad period in time where interest rates kept going up, there was a lot of celebration. And so the mortgage rates ticked down. Now the mortgage rates have actually been coming down little by little since November. Each week we saw a little bit of a decline. So in the past 6 weeks, we've seen like a 1 to 1.5% decline in interest rates, which is a huge success. Now, what's going to happen to rates in 2024? So it is forecasted from a lot of powers that be, a lot of good economists and people that follow the market all of the time, that in 2024, it could happen in March. Now, I follow this guy, I follow Clear Text Value on YouTube. If you don't follow him, he's an accountant. He's a CPA, I believe, but he has amazing information. So I binge all of his videos. He's fantastic. Clear Tax Value says that there's a 40% chance that the Fed will lower little by little, that they'll have a decrease in the federal funds rate that they control in March of 2024. There's a larger chance, there's like an 80% chance that it'll happen in the June market committee. There you have it. There's a good chance that by mid-year, things will start to come down. Now, that doesn't mean that mortgage interest rates are going to take a nosedive. However, it means that there's going to be some good activity next year, that rates could start easing downward. How far down, nobody really knows. Now, just remember that mortgage interest rates are also influenced by a lot of other things. They're influenced by global activity. They're influenced by global financial markets. Lots of things affect the interest rates in mortgage because the mortgage interest rates sit in the bond market. So the stock market, the bond market, that's where mortgage interest rates are determined. So just to repeat, the federal funds rate we see on the news, the Fed, that is not the mortgage interest rate. However, it's a good indicator when things are happening, but it's not percent for percent, et cetera, et cetera. So we are going to see some easing. Now, you probably are asking, is it still a good time to buy a home? Should I wait? What should I do? I'm actually going to show you a clip of Clear Tax Value, one of my favorite YouTube sites currently, where he talks about where his forecast about what's going to happen to values. It's super interesting. So I'm going to play that clip from Clear Tax Value for you right now.
When the Fed pivots and they start lowering interest rates, then mortgage interest rates will fall, which is a good thing. But you know what's going to happen? That's going to increase demand and home prices will go up naturally. And that's a bad thing, obviously, if you're trying to buy a home.
So as you can hear, it's estimated that values are going to continue to go up. If you do buy now, when is the right time to buy? Nobody really knows. Nobody can answer that question, but I can tell you from experience. So I've been doing this for 28 years, since 1995, and I have seen lots of up and down markets. You can always refinance the interest rate. There's a lot of companies, including ours at Legacy Mutual Mortgage, that we are giving clients a refi with no lender fees when the time comes. So we know that people that buy now, the rates are going to be increased. We know that people are going to be refinancing. So if you find a home that fits your needs, I think that it's better to buy the house now while the value is here, rather than holding out 6, 7, 8, 9 months, and then the value of the price is here. Now, I'm going to play another important clip for you because there's this misconception that values are going to be going down, that values are just going to dump and that things are going to go backwards. I actually disagree. And a very well-regarded economist, Barry Habib, I'm going to play another clip for you. Barry Habib shows us a graph that since 1942, which is like 80 years ago, there has only been 6 years where the value has actually gone backwards. So let's watch this clip really quick.
Everybody worries about this period of time, but in the last 81 years, the green's up years, this was kind of flat. So you got 75 up years, 1 kind of flat, and 5 down years. But people are saying, oh, well, prices went up, so that means they've got to go up. But here's the thing. If you looked here, they went up 118%. I know we went up 40% in the last 3 years, but 118%. If you waited for prices to come down, you had to wait 59 years for that to happen. Along the way, look at this 12%. Look at this 93% gain. Look at these big gains here. Look at these big gains here. Now, so what happened here? What went wrong? It'd be instructive to see what went wrong during this 5-year period of time where prices did decline significantly.
So there you have it. The 2024 forecast is that rates are going to come down and values could potentially keep going up. So make sure you talk to your lending professional. If you're in Texas, I would love to talk to you. Get approved, see what's right for you. Thanks for watching. And if you haven't subscribed yet, you know what to do.